Hi, this is Mike Maloney. Back on July 9th, I made a video about the silver shortage, and the predictions that I made in that video are all coming true. One of the things that I said was that the price of silver eagles would not fall along with the spot price of silver. And instead, the premiums over spot have gone way up to compensate for that price. The suppliers have actually increased their profit margin by about 1,200%. And the reason they've been able to do that is because in this supply chain, only half of it is free market. We have the side between the supplier and the dealers, such as my company, uh, and then the other half of that is the supplier and the U.S. Mint. Now, the U.S. Mint is a government monopoly, so it's centrally planned. When they start running out of eagles, they don't sell them to the highest bidder, which is what would happen in a free market. What they do is they say, well, these are our dealers that we were selling to before, and before the shortage, they were taking X% of our production. And so what we're going to do is they're going to get that same exact percent every month. So the dealers have this, the suppliers have this allocation. And then in order not to run out of coins, they have to seek a supply-demand equilibrium. So they keep on increasing their price until the coins are not selling too fast or just one big buyer comes and cleans them out. So here's a chart from Nick Laird of sharelinks.com. And what you see here, this is a week ago, but you see the increase in the premium over spot for silver eagles, and this has now gone over 33%. It was 25% over the spot price a little over a week ago, but now it's up over 33% today. And today, with the spot price below $15, eagles are selling for about the same price as when the silver spot was at $18. And so that shows you that something that is centrally planned and this allocation thing, it only hurts the consumer. It's benefiting these suppliers. The dealers, such as myself, they still have to fight over market share. They're still in a free market situation. And so this windfall of profits is not flowing down to the dealers. The dealers still have to be extremely competitive to keep their customers happy and to maintain market share. All of the other silver items are going into shortages as well, and they're all selling at premiums over what they used to. Some suppliers have increased their premiums on 1,000-ounce bars by 400%. Now, that's huge. 1,000-ounce bars normally have a trading range over spot that is very tiny, and it almost never fluctuates. This reflects a fundamental tightness in the supply of the entire silver industry. And it's made it very difficult, like all of the mints right now are backed up 6 to 10 weeks. In fact, one of our own products, the Next Modern Ancient, was supposed to be released in July, and we still haven't released it because of this backup at the mints and the difficulty getting silver and the new prices of silver. Now, I expect the tightness, if the mint comes out with 2016s in quantities that are enough to supply the demand, at that point, this silver shortage will probably start to back off. That would probably be in February or something like that. And if it does, everything will come down to get closer to the spot price, and the mints will be less backed up. So everything will go back to sort of a normal situation. But the thing is, a crisis is going to start this way. I expect that this isn't it, but I do expect that one day you're going to see all these premiums start to shoot up, and it's not going to stop. It's going to keep on going. And so, for me, I'm just glad that I'm already positioned for it, so I don't have to worry about it. So anyway, that's my take on things. Thanks for listening. Subscribe to the channel for updates, and we'll see you next time. Thanks.